Well, looking at the current market situation now, we think actually if the government eventually remove all the stamp duties, it's not really an inappropriate measures because all of them are not really valid to the current market. But we don't expect them to be removed at once, probably by stages. So at today's policy address, we expect some of the policies like the BSD will probably be removed first because it's the most urgent things to be removed, especially if we are trying to attract overseas tenants to come into Hong Kong to work and to live. So BSD is a must to be removed.
BSD being the buyer's stamp duty, which currently stands at 15%. Now, attracting talent is one thing that the chief executive needs to do as well. In terms of the property space, we're seeing transactions down. Vacant units are at the highest in 2 decades, over 20,000 at last count. What can he do to boost the market?
Well, I think currently when we look at the market sentiment, when we see it's weak, but it's not just because of the property prices down by 15% compared with the peak level. We also see the transaction volume being at a very, very low level, probably the weakest since the reopening of the economy. So when we had the reopening of the economy at the beginning of the year, the transactions rebound to 6,000 per month. But now it's back into 2,000-3,000 per month. So almost back into the situation when we have COVID. So I think the government had to do something in order to boost the market, not just for the property price, but mainly for the transaction volume.
Property prices have fallen 15% since their peaks September 2021. What is your forecast for 2024?
Well, I think when we look at the current market situation, it's currently impacted by a basket of negative factors, not just because of the stamp duty thing, but we're also facing a high interest rate environment. The economy is not doing well locally in the mainland and all over the world. So these factors will continue to impact the property market, even if the government is removing the stamp duty today. So we expect the market to go down by 5% in the second half this year, and probably another 5% in next year as well.
So you were looking at 10%, and with that, as Hong Kong tracks the FOMC in our interest rates because of the dollar peg, higher for longer, what is your outlook for interest rates here?
Well, for the interest rate, it's mainly depending on the pace for the U.S. because the U.S. economy is not really doing particularly well, but they also have to face the inflation problem at the moment. So we expect the interest rate hike to cease at the end of this year, but probably when we expect the rate to be reduced probably sometime at the end of next year. So probably another 12 to 15 months to go for our high interest rate environment in Hong Kong.